PD. You have to assign a PD ratio, probability of default ratio to make this expected credit losses. Make this
through the investment or through the financing, you have to pump the money to carry out the operation. So therefore, operational cash flow is negative. It's an indication.
You compare the current market value of the group. So current market value of the group including JV means only the 60% portion of the JV and without JV. So you got this 1778 value. Sri Lanka, India, Japan, all world income is taxable under resident state. It means this entire 250 taxable in Sri Lanka.
Has some interesting stuff, especially when it comes to ID. As you see over in this video, we're going to talk about things like AR and VR and
Student, probability of default 100%. Why? We are almost at the default stage. The probability of default के लिए क्या होता है? What is the probability that customer might goes to default bucket? What is the probability that customer might goes to stage 3? What is the probability that customer is defaulting? So if the customer is at stage 3, already he has defaulted. It means the probability of default is 100. Already defaulted. Come to here. Now we are at stage 2, not still we are going to the default stage. Now what is the probability of default? So let's say it is 75. It is 75. So we have a loss event but still not defaulted, but the probability of default is.
If you are unable to import the vehicles, what will happen? So you are not sure whether you will be able to continue in your business for 12 months. And when the COVID-19 came into Sri Lanka in 2020, what happened? There were small hotels, other than the big hotels, or small hotels, the tourism was zero. And with the social distance, people were not going to hotels. What happened? The hotels income, right? Hotels income became zero. And also, let's say the recent economic crisis that the country faced. And with the economic crisis, government had to restrict so many items, the importing to Sri Lanka, including the mobile phones. So what happened? So most of the companies, those are engaged in those business activities, they face a lot of challenges. Let's say mobile companies, they are facing another challenge. And it's a good example. Take another example.
Come to T, I told you, look at the immediate percentages. 40 and 30, 40 and 30. Look at the immediate percentages. 70. It is going to become a subsidiary. It is going to become a subsidiary. If you think logically what is happening, through S, P can significantly influence 40% of the shares of T and directly they can influence 30%. That 40% and this 30%, it will bring you more than 50%. It will bring you 10. Effective holding and NCI. When it comes to S, not a rocket science, 90% and NCI 10%. When it comes to T, we have to compute 90% into 80.
With our business, so there will be a significant doubt that the company will getting into the going concern issue. So likewise, we can analyze further operational issues, and you can't limit to the checklist given in the standard, but depending on the case scenario that you are going to face at the examination, you will be able to figure out because of this incident there will be a doubt about the
Once you become a chartered accountant, people will expect you to be the head of the corporate finance, be the CEO or the CFO of that particular organization. So, we need to have a clear understanding on what is corporate finance. That is the wealth maximization. So how to maximize shareholders' wealth? First of all, you need to fund. So you can fund either from equity or debt. Once you fund from equity and debt, there is a cost. That is the cost of capital, either a cost of equity or a cost of debt. So once you fund, you invest. So you can invest in projects or businesses. You may have investment appraisals, business valuations. Yes. When you fund, when you invest, There can be some exchange rate risk, interest rate risk and all. Then students, once you invest, you need to pay back to the shareholders. Present rate, while they will get the SLIBOR plus 1%. Now see the total is how much? Anyway, SLIBOR is coming. SLIBOR is coming. And here SLIBOR plus 1%. So more than SLIBOR, you need to anyway pay 1% and here 10%. So which means now total is how much? Now I see. See carefully. Understand the logic. If the company is not swapping, without swapping, the total is SLIBOR plus 12%. If the company is swapping with swap, the total is SLIBOR plus 11%. So are you seeing a gain here because of the swap? Yes.
Now this is the Japan territory, this is Sri Lankan territory. I mentioned in this example, someone having income sources of Sri Lanka, India and Japan. But someone is a resident of Sri Lanka, right? The same person, someone is become a non-resident of Japan. Why? Someone earning income from Japan as well, right? So for the non-resident purpose, someone is a non-resident of Japan. So this non-resident principle said that a non-resident person need to be taxed income arising or deriving in a particular state. In simply, someone need to pay taxes on Japan, someone need to pay taxes in Japan only on the income earned or derived from Japan. It means only 100 is taxable on Japan, right? So this is a principle called resident and non-resident principle. So in this given example, you might have some kind of a doubt. Someone is paying 250 tax in Sri Lanka. In addition, someone has to pay 100 rupee tax in Japan as well. So someone is paying double taxation, right? So for these avoidance of these concepts, we have a separate concept called double taxation agreement. So we will discuss these matters under your relevant topic under international taxation and non-resident taxation. Is that the official purpose traveling or my private purpose traveling? Actually, I went for the Department of Internal Revenue on behalf of official matter, right? So in this kind of reimbursement, like official reimbursement, yes, we can exclude from employment income. Official reimbursement, right? Official reimbursement exclude from employment income, but for the personal reimbursement should be included to the employment income. Income tax payable will be divided into first 6 month and second 6 month basis 24% and 30%. So total income tax payable is 8.1. Out of that we can deduct WHC credit 280. So the final amount 7820. Right. So this is the example. So question number 2.
Is where I'm writing two answers. The one that you see in yellow is where I'm writing the point, and the one you see in green is where I justify the point. My goodness, justification plays an enormous role. Brain dumping is not expected in this exam. ඒ කියන්නේ textbook එකේ තියෙන දේවල් කටපාඩම් කරලා ලියුවොත් you fail, my friend. So there is a way of what we call as substantiating, justifying. We're going to learn about that when we do the past paper analysis. So that's you ever thought like this? කවදාහරි මෙහෙම කියලා තියෙනවා. අඳුරන මූණක් දැකලා මුරුදුයි. අඩේ, this is my mother. No. You will never say like that, right? Because you see your mother every day. ඔයාගේ ගෙදරට යන rooms ටික හරි washroom එක arrows එහෙම දාන්නේ නැහැ. You every day you know where your room is. ඒක arrows දාලා පෙන්නන්න ඕනේ නැහැ. In the same way, when you go through the same thing, you see your mother every day, as you see your room every day. When you see the same thing over and over and over and over and over again, it starts to register in your mind. That's what we are using here. දැන් මේ mind map එක තියලා මේක ඇඳයට තියන්න ඕනේ නෑ. මේක ගහන්න ඕනේ හැමතැනම. අරගෙන you have to start reading it over and over again. essential goods basically, the goods that you have to buy on a day-to-day basis. So that's a very important word when it comes to convenience goods. The word, day to day. I would write it down. Day to day. That's a very important word. And then comes shopping goods. Shopping goods are goods that, well, before you buy, it's not something that you will buy regularly. It's an important product which you will spend marginally a bit higher, but before you will look at the quality, you will look at the price.
onlineaccounting.lk